Today we're going to talk about the other side of the story, how the Bitcoin bubble will pop. Now before you dislike the video, a lot of time and research went into producing it, so I hope you'll give it a chance. I'm still a small YouTuber, so any engagement and subscriptions are always appreciated. So if you've read any of the latest stories or comments, then you've seen everything in the book. Bitcoin is a bubble, a tulip, a magic bean factory, a fraud, a Ponzi scheme, just about anything under the sun. Today we'll venture to the other side of the story. What will cause the Bitcoin bubble to pop? Will it be another Mt. Goz? Will it be stricter regulations? Will it be the affiliation with the dark markets such as Silk Road and Alpha Bay? How about sovereign governments outlawing it as their economies are threatened? Today, we go to the dark side of the moon. We begin with the tale of Mt. Goz. Many of you are familiar with it. It was the largest cryptocurrency exchange back in 2013 and commanded over 70% of the total trading volume. It began facing problems in March 2013 when FinCEN released a statement saying that exchanges were money transmitters. As a result, they had to comply with anti-money laundering laws, which many of you are familiar with now. Mark Karpelès reassured everyone that it was fine, Mt. Goz was in full compliance, but in reality, they didn't register with FinCEN until June. In the meanwhile, they lost their only payment processor due to account seizures by FinCEN. This froze US dollar withdrawals, which spiked the value of Bitcoin as customers bid it up and then withdrew it from the exchange. As a result, we saw a significant decline in volumes throughout the rest of 2013. As many of you know, the final nail in the coffin was when Mt. Goz was hacked for approximately $500 million worth of Bitcoin. This made them file for bankruptcy. It also led to one of the most painful bear markets Bitcoin has ever experienced, as it went from a high of $1,200 to a low of around $170 in the course of a year. Now you might be wondering why we're talking about events from 4 years ago. The purpose of this history lesson is to help you draw parallels to the world's current largest exchange, Bitfinex. According to CoinMarketCap.com, Bitfinex commands approximately 12% of the total cryptocurrency trading volume. Like Mt. Goz, Bitfinex was hacked last year in August. The lost funds totaled approximately $72 million. Now, this particular hack targeted random wallets and cleared them, meaning some customers lost everything while others were left unaffected. As a result, Bitfinex decided to make a rather controversial decision to reduce everyone's account balance by 36%, including US dollar holdings, to spread the losses out rather than concentrate them on a few select customers. This angered many people. Surprise, surprise. To compensate the customers, Bitfinex issued BFX tokens, which you can think of as essentially being bonds, with zero legal obligations. Sounds scary, right? Well, they enabled customers to trade these tokens on the exchange, and as you might imagine, they traded for pennies on the dollar. Eventually, Bitfinex reclaimed all of the BFX tokens at par value, or for $1 each. One observer who goes by the name of Bitfinex, or BitCryptoed, noted an interesting correlation between a cryptocurrency called Tether and the repayment of BFX tokens. In particular, he pointed out that as BFX tokens were paid off, the number of Tether issued was drastically increased. To understand why this is suspicious, I would encourage you to check out another video on this channel titled "Is Tether Committing Fraud?" In short, Tether is a cryptocurrency where investors are able to deposit US dollars in exchange for tokens that are backed by the US dollars deposited. In other words, it is pegged to the US dollar in a 1-to-1 ratio. Many cryptocurrency exchanges use Tether as a substitute for the US dollar due to the complications in dealing with US banking. Bitfinex has a majority stake in Tether Holdings, the company behind Tether. Now, Bitfinex, the guy I was talking about earlier, he theorized that as investors gave US dollars to Tether Holdings in exchange for Tether, instead of placing those US dollars in reserves like you would expect them to do, they funneled them through the Bitfinex platform. Bitfinex then took those funds and used them to pay off the BFX tokens. It all sounds like a conspiracy theory or an elaborate ruse, but many aspects of it ring true. For example, Tether Holdings only just recently released its audits and they stop at March 31st. This is conveniently 3 days before Bitfinex made the announcement that they would be paying off all remaining BFX tokens. In addition, both companies filed a lawsuit against Wells Fargo after the bank decided to suspend international wire transfers to the Taiwanese banks that they both use. Bitfinex began to refuse US dollar deposits and withdrawals, resulting in a premium for Bitcoin on the exchange. Sounds dreadfully familiar to Mt. Gox, doesn't it? To respond to these events, Tether Holdings informed everyone that international wire transfers would be denied. Until they solved their money transfer problems, Tether Holdings announced they did not anticipate the amount of tethers issued to increase significantly. Since this announcement, the number of tether issued has increased nearly tenfold, from 55 million all the way up to 418 million at the time of recording this. Tether attempted to justify this in their latest update, claiming that their institutional clients were setting up banking locally and therefore were responsible for the issuance of new tether. We have never seen the amount of tether in circulation decrease substantially, meaning that very few are being redeemed for US dollars. I find it hard to believe that no institutional customers want to cash out of a company facing so many banking issues. The latest update also included a statement claiming that Tether Holdings would be releasing an audit in the coming weeks or months that goes all the way back to the beginning of 2017. Now, whether or not Tether is legitimate is anyone's guess, but if it turns out to be a fraud, they will likely bring Bitfinex down with them, not to mention the significant amount of Tether trading volume on the other exchanges. All the evidence against Bitfinex and Tether is circumstantial. I really want to emphasize this. But you can't deny it is difficult to see all of this as happenstance. There has been other red flags with Bitfinex as well. These include the trading halt in Bitcoin last June, the contradictory statements between the employees and Phil Potters related to the equity stake in Tether Holdings, the complete lack of information about the people behind Bitfinex, the $75,000 fee they had to pay to the U.S. Commodity Future Trading Commission, and recently they outright declined service to all U.S. residents now as of August. I would stay away from Bitfinex and Tether like the plague. Okay, so that's the first potential catalyst that could pop the bubble. But let's be real, at this time it is a little bit far-fetched. This second catalyst might hit a little closer to home, a regulatory crackdown on initial coin offerings, or ICOs. Recently, we saw China impose a temporary ban on ICOs. Most of you are aware of the many dangers associated with them. Sometimes the developers take the money and run, sometimes they simply invest it because they don't know what to do with it all, and sometimes your funds go straight to the hands of criminals as a result of phishing or exploits. This year, we saw ICO funding outpace early-stage VC funding, which put it on the radar for both institutional investors and governments alike. Right now, ICOs are largely an unregulated field. However, there are many signs that show this is about to change. To put into perspective the global views on ICOs, I've gathered critical communications from the major countries around the world. Starting with Switzerland, this is the world's epicenter for ICOs. Many of the highest grossing ICOs have been housed here due to the crypto-friendly environment. The important distinction is whether or not a token is classified as an asset or a security. Securities have to go through additional regulatory hurdles and must put in certain protections for investors. In Switzerland, they generally favor the asset definition. As a result, Switzerland houses a small city named Zug, which is dubbed Crypto Valley after Silicon Valley. It houses some of the largest names in crypto, such as Ethereum and Shapeshift. The government seems keen to help the businesses flourish overall. In summary, this is the world's friendliest place for crypto. Yet the Crypto Valley Association, which is to Crypto Valley as Y Combinator is to Silicon Valley, they've recently made a statement warning about the lack of security, documentation, and overall professionalism in many ICOs. Their goal is to increase awareness and illustrate good faith, which should encourage the government to work with them. Yet it is interesting to note that the world's epicenter for ICOs is warning us about the Wild West that they currently are. Now, this graphic summarizes some of the recent communications from different countries around the world about ICOs, many of which mirror the statements made by the Crypto Valley Association. I want to emphasize that the most important question to answer is if a token is a security. If it is, then the majority of ICOs are breaking the law in about 900 different ways. While it was feasible for regulatory agencies to ignore ICOs for a while, they are starting to become impossible to ignore due to the explosive growth in funding. As such, we may start to see many tokens be classified as securities. If so, it is possible that this could bring the entire ICO economy to a halt. Several cryptocurrencies depend on the health of ICOs, such as Ethereum, Neo, Waves, and a number of others. Ethereum is the most important among these and currently sits at approximately 40% of Bitcoin's market cap. If we saw ICO funding dry up due to increased regulations, Ethereum could easily take a dive and bring the market down along with it due to its relatively high correlation with other cryptocurrencies. That's the main case for catalyst number 2. But I want to pose a quick counter-argument here before the bull arguments watching this video lose their patience entirely. Filecoin broke records with its ICO, raising approximately $257 million. Unlike many other ICOs, Filecoin chose to only open up its token sale to accredited investors. In addition, they put significant effort into being SEC compliant through the proposal of the Simple Agreement of Future Tokens, or SAFT. The goal is to comply with Regulation D and hence avoid most of the baggage that comes with being a security, while not incurring the wrath of the SEC, which, let's be clear here, nobody wants to do. Time will tell if this strategy works, but the point is that adding legitimacy to ICOs through regulation could have the opposite effect of what many speculate. The third and final major catalyst that could cause cryptocurrencies to spiral is the closing of fiat gateways. This is a fancy way of saying the closure of cryptocurrency exchanges. Obviously, the headline here is the close of BTC China and concerns over OKCoin and Huobi. Some sources are claiming that all Chinese exchanges will close. The market is certainly pricing it in that way right now. Bitcoin has declined 20% since BTC China's closure alone, validating the risk associated with sovereignties going after cryptocurrencies. The real question is whether or not this is the first step by governments worldwide to shut down cryptocurrencies as a whole. While they may not be able to go directly after the cryptocurrencies themselves, they could easily slaughter the possibility of mass adoption by removing the transfer channels between fiat and crypto. Could you imagine if the US banned GDAX and Gemini? This is often championed as the greatest risk to cryptocurrencies. However, China has always been the odd one out. Their borders are capitally controlled, they censor the internet through TCP packet inspection, they have banned VPNs, and have done much more. Is it really reasonable to believe other countries will follow this extremist government? Since China led the charge against ICOs, some are arguing it is possible China will also lead the charge on stricter regulations for exchanges. I want to emphasize that the bulk of volume is driven by the yen and US dollar. Japan was the first major country to accept Bitcoin and cryptocurrencies with open arms, so it is unlikely they reverse their position. In the US, the two largest fiat to crypto exchanges, GDAX and Gemini, are both FDIC insured. Coinbase, which owns GDAX, rose $100 million in a Series D funding round, which in my opinion adds legitimacy to the company. Gemini has support from the Winklevoss brothers, who have close ties with regulators, as evident in their involvement with the hearings on the creation of New York's BitLicense. They also are working on the first Bitcoin ETF. Therefore, I do not see either Japan or the US cracking down on exchanges anytime soon. While additional regulations are likely, I suspect that they will not be restrictive as those in China. My advice is never look at China as an example of how other countries will behave. How many times has that worked out? Still, it is worth keeping an eye on what the FSA and SEC may say moving into the future. Before I conclude, I want to inform those of you coming from YouTube that I have an article on Seeking Alpha and Medium that covers the material in this video. In that article, I go into more detail related to each specific country's stance on ICOs, and I also include a small section where I talk about investing in the Grayscale Bitcoin Investment Trust. If that sounds interesting to you, check out the description below for the links. Did you survive till the end here? I'm really impressed if you did. Bitcoin is a great long-term investment for those who understand what it offers and the current perception by the markets. There are many institutional investors waiting on the sidelines to invest, and I tend to believe they will deploy that capital at around $2,700. However, it is always crucial to be mindful of the risk associated with any investment. In this video, we covered 3 possible catalysts that could pop the Bitcoin bubble. The first is the possibility of fraud by Bitfinex and Tether. I really don't have a strong counter argument for this because there's a ton of shady activity going on there that I don't feel comfortable with. As such, I will continue to monitor the situation closely, and I encourage you to do the same. The second is the possibility of ICO funding drying up due to increased regulations, resulting in a market crash led by Ethereum. The counter-argument here is that attempting to do things the right way may actually lead to an increase in ICO funding. We saw some evidence of this with Filecoin, although it is important to note that complying with Regulation D is a whole lot less costly than having to register as a security with a full prospectus. Lastly, we discussed the possibility of governments closing fiat gateways, which would ultimately lead to shutting off crypto from the real world. While this could happen in China, both Japan and the US will likely allow exchanges to continue their operation without significant disruption. Japan is outright pro-cryptocurrency, while the US has significant players that should be able to influence regulators in the right direction. I hope you liked this video. Consider leaving a like, comment, and subscription, as it goes a long way to letting me know that you like my content. Thanks for watching, and I will see you in the next video.